Hello traders, this is Joanne with Succeed in Forex. Welcome to our Forex Market News broadcast for Tuesday, March the 4th, 2008. The headlines out of Switzerland this morning are reading, dollar edges up after ISM and comments from ECB's Chief Trichet. The dollar halted a sharp sell-off against the euro and a basket of major currencies on Monday, on relief that the U.S. manufacturing had not deteriorated as much as expected. However, analysts are saying that it's unlikely the dollar's recovery will be sustained given a raft of economic data this week that could reinforce fears of the U.S. recession and a steeper Federal Reserve interest cut rates this month. Traders wary of another below expectations economic report had pushed the euro earlier to a lifetime peak of 152.76, but quickly started buying back the dollar when their fears did not materialize. The euro-dollar traded at 152.00 at the close, up 13%, after having hit a lifetime peak of 152.76. The dollar-yen traded at 103.51, down 21%, recovering from a previous three-year low of 102.61. The euro-yen weakened at 157.34 after hitting earlier multi-week lows at 155.94. And the euro-Swissy dropped as low as 157.01, a 1.5-year low, before rebounding to 158.26. Some traders attributed the dollar's recovery to remarks by European Central Bank's chief Jean-Claude Trichet that Washington backed a strong dollar. Trichet made the comments as he entered a meeting of the Eurozone finance ministers in Brussels. I have to apologize for any background noise we might be having. We're having severe storms here in Florida, and I'm hoping I'll be able to complete the news broadcast before I have to shut down. But on to the news. Analysts are saying the dollar's mild recovery was likely to prove temporary, with more new U.S. economic data coming out, particularly the non-farm payrolls, which is still due out this week. The Institute for Supply Management's index of the U.S. national factory activity fell to 48.3 in February from 50.7 in January, slightly above economists' expectations for a reading of 48.0. A figure below 50 indicates a slowdown, and analysts are saying the reading meant that an aggressive interest rate cut at the March Fed meeting could not be written off. Short-term interest rates futures showed about a 75% chance of the Fed lowering its benchmark overnight lending rate by 75 basis points at its March 18th meeting. That would further reduce the allure of the dollar in favor of higher-yielding currencies such as the euro or the Australian and New Zealand dollars. The benchmark Fed funds target rate is currently at 3%, after being slashed by 225 basis points since mid-September. The Eurozone's refinancing rate is at 4%, with the European Central Bank preoccupied with inflation. The U.S. dollar was steady in the Asian session as markets await a slew of central bank rate decisions this week. The Australian dollar fell to a 5-day low of 92.65 as the RBA's Governor Stevens comments following a 25 basis point hike to 7.25% were deemed dovish. The hike was widely expected as inflationary pressures have been building in the Australian economy. The market had anticipated the central bank would signal additional tightening, but did not expect the reserved tone the governor took, stating, "Tentative evidence that some moderation in household demand is beginning to occur." This language suggests that the RBA is willing to wait and watch. But with the GDP growth fourth quarter probably remaining strong around 3.6%, that figure will be released tonight, the RBA might be pressured to move up one more time in 2008. We believe that the Aussie will be supported by renewed rate expectations while benefiting from one of the highest rates in the developed economies. In Japan, as expected, the rhetoric surrounding the recent appreciation of the yen has increased exponentially. Economy Minister Hiroko Ota stated that he was really concerned about the recent abnormal strength of the yen against the dollar and that the strong yen is hurting profits of Japanese corporations. While Finance Minister Nukaga said at a separate news conference, "We will keep watching movements in foreign exchange rates from now on." Given the tone and frequencies of these statements, some form of intervention is very likely. In addition, the strong yen has increased speculation that the next move by the Bank of Japan will be a cut. The Bank of Canada is expected to cut rates by 25 basis points today, but there is growing evidence that the central bank will go for 50 basis points instead. With the GDP growth slowing to only 8% in the fourth quarter, which was released yesterday, the Bank of Canada will be tempted to take a more aggressive policy stance. The fact that the CPI stood at 2.2% in January, while the core was at a tame 1.3%, the central bank has more room to maneuver. On the continent, the Eurozone's GDP growth for the fourth quarter should confirm that the region ended last year on the soft side. It seems that the domestic households remained both inactive and thrifty. The foreign exchange markets were eerily quiet in the European session, considering the past volatility. After a short spike in the euro-dollar on the economic release, the pair settled into a 152.03 to 152.31 range. The data painted the unwelcome combination of the eurozone slowing GDP growth and increasing price pressures. The annual GDP growth rate was cut to 2.2% from 2.3%. representing the slowest pace in 2 years. And on the other side, the producer's price inflation figures rose to 4.9% from 4.3%, a significant buildup in price pressure. At some point, the European Central Bank will have to address slowing growth, but the strength of prices means that a near-term cut is off the table. The Bank of Canada cut 50 basis points to 3.5% interest rates in Mark Carney's first monetary policy meeting as governor. In addition to the rate cut, a statement that said further monetary policy stimulus is likely to be required in the near term cemented the fact that more cuts are forthcoming. This concludes our news for today. Thank you for viewing, and we are hoping that this information is helping you in your trading. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you will find a link to our Forex forum at Yahoo, also called Succeed in Forex, and additional information about our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. We hope you'll visit us soon. Have a great trading day and happy pipping.